Welcome to the Explainer. The crypto world can feel like this just chaotic, confusing mess, right? There are thousands of different assets out there. So today, we're going to unpack a really simple but powerful map created by one of its biggest investors, Michael Saylor, to help bring some much-needed clarity to it all. Okay, so here's the plan. We'll start with the simple change in thinking that kind of unlocks this whole map. Then, we'll explore the four main districts of the crypto world that he's laid out. We're going to make it all super tangible with a brilliant real estate analogy, use that to map out risk and reward, and then finally, we'll see exactly which part of the map Saylor himself is betting billions on. All right, so where does Saylor's map even begin? Well, it's probably not where you'd expect. It doesn't start with technology. It starts with language. He argues that if you really want to find clarity, you have to stop using the wrong words to describe what you're seeing. And this one simple shift from currency to asset, that's the key that unlocks his entire framework. It immediately reframes the whole conversation, right? It moves it away from this confusing debate about digital money and toward a much clearer discussion about different types of, well, digital property. And listen, this isn't just some theory he came up with. Saylor has put his money where his mouth is. His company, MicroStrategy, holds over 100,000 Bitcoin. That makes him one of the largest corporate investors in the entire world. So when he outlines a framework, he's really outlining the strategy that guides billions of dollars. So if most of these aren't currencies, then what are they? This is where the map gets really useful. Saylor just cuts through the noise of thousands of different projects by sorting the entire ecosystem into just four distinct categories. He breaks it all down into these four pillars: digital property, digital currency, digital platforms, and something called decentralized applications, or DApps. And once you understand these four categories, navigating the crypto world feels less like you're wandering in the dark and a lot more like you're exploring a new city with a map in your hand. Okay, but I get it. These categories can still feel a little abstract. So what Saylor does is he makes them tangible using a powerful analogy that we can all get right away: real estate. For a lot of people, this is the moment where it all just clicks into place. First up, you've got digital property. And for Saylor, Bitcoin is the ultimate example. He argues its main purpose isn't for, buying your morning coffee. No, instead, it's engineered to be a long-term store of wealth, something that preserves value for decades, maybe even centuries. In his analogy, this is the bedrock. It's the land itself. He uses this really powerful image. Imagine your family owns a block of prime real estate in the center of London, and you've had it for 300 years. You wouldn't sell it for a quick profit, right? You hold on to it, you build on top of it, and you pass it down. It's a generational asset. Okay, next up, we have digital currency. These are assets like stablecoins, and they're designed to hold a steady value because they're pegged to a traditional currency like the US dollar. This is basically the cash of the digital world, built for one thing: fast and efficient transactions. So let's go back to our London analogy. If Bitcoin is the land, then a stablecoin is the local currency. It's the British pound you need in your pocket to actually buy and sell things and just conduct business day to day. The third category is digital platforms, with Ethereum being the most well-known example. You should think of these as the fundamental infrastructure of our digital city. They're kind of like the operating system that allows all the other programs and applications to be built on top. So in our real estate analogy, if Bitcoin is the land, then platforms like Ethereum are the buildings you construct on that land. They provide the structure, the floors, the walls, the electricity, for economic activity to actually happen. They're essential for sure, but they are not the land itself. And that brings us to our final category: decentralized applications, or dApps. These are the actual software and services that run on top of the digital platforms. And this includes everything from decentralized financial exchanges to digital art marketplaces. So to complete the analogy, the dApps are the individual businesses that operate inside those buildings. They're the coffee shops, the art galleries, the banks. Each one serves its own unique purpose, and they're all basically renting space in the building, which of course sits on that foundational land. Now, this analogy isn't just a neat way to categorize things. It actually helps us understand risk. I mean, think about it. Investing in a plot of undeveloped land is a very different bet than funding a brand new coffee shop. And the same logic applies here in the digital world. This chart really lays it all out. According to this model, the land, digital property like Bitcoin, has the lowest long-term risk for its potential growth. But look at the other end. The businesses, the dApps, They have huge growth potential, absolutely, but they also come with a very high risk of failure, just like any startup. And maybe the most surprising part? Cash, the digital currency, is seen as high risk because of things like inflation eating away at it.
And once you see the crypto world mapped out this way, Saylor's own investment strategy becomes perfectly clear. From his perspective, as a long-term corporate treasurer, well, only one of these categories really makes sense. It all comes down to this single critical question he asks. Of all the popular assets in our financial system, which one is actually designed to go up in value over the long haul? The answer really gets to the heart of his entire thesis.
His argument is pretty simple. Fiat currencies, like the dollar and the euro, they're engineered to lose value over time through inflation. That encourages spending. Bitcoin, he claims, is unique at this scale because it was engineered for the exact opposite purpose, to appreciate over the long term as a pure store of value. So for Saylor, the choice was obvious. He didn't want the currency, or the buildings, or the businesses. He wanted the one asset designed to be a decentralized store of wealth, with the strongest, most secure foundation. He wanted the digital land. He chose Bitcoin. So look, the big takeaway here isn't about what to invest in. It's about having a better way to think. This framework, it's a mental map that lets you look at any digital asset and ask the right questions. Is this digital land? Is it a building, a currency, or is it a business? At the end of the day, this framework doesn't give you the answers, but it gives you a much better way to understand the questions. It gives you a map to navigate a complex and, let's be honest, often confusing new world. So the only question left is, which district will you explore first?